You got me running. Shake it, baby. Raise your hands up. Raise them up.
All right. Hi, everyone, and welcome back to the daily currency call with Forex Trading Asia. So this is episode 362. It is the 25th of August, 2021. And if it is your first time here, welcome. And if you're back again, welcome as well. So we do this currency call every Monday to Friday, and we do the currencies as follows. So on Monday, we do the Aussie and the Kiwi. On Tuesday, the Euro. Wednesday, the pound. We do Thursday, yen pairs and gold. And then on Friday, we do CAD pairs and crypto, specifically Ethereum and Bitcoin. So this is the currency call where you'll get market economic updates. You'll also get what to pay attention to in regards to the economic updates as well, which is very important because it's very easy to get overwhelmed by everything that's coming out from the economic calendar, the key support and resistance levels of the pairs in focus, also trade education and how to construct a trade idea. And this currency call will be very beneficial to the long-term investors and also the short-term traders as well. This is where we will go through what could move prices, and we also highlight potential targets and also risks. Also, quick disclaimer, please remember this information shared during this session is not intended to be a trade recommendation. It's simply the views of the speaker. So please understand that. And also remember to do your own analysis prior to entering any trades as well. So guys, it is time for the US dollar analysis. And it has been, it's been a little interesting. Let me bring up the charts here. And thanks to Samtrade. Already Wednesday. Now, what I've done here, guys, is we've had a recent low we've seen earlier in the week, and we have earlier last week, and it did get through 93. Now, a lot of this activity has been somewhat unexpected, but in trading, you've got to learn to be adaptable and also, go with, what the market is doing. So I drew this in earlier this morning when I did my morning market update for the LCMS Traders Club. And it's, I didn't really think it was going to pop above 93 so soon, and it has. And this really honestly is presenting buying opportunities. Now, in regards to the news that we saw last night and also what's happening today as well, let me bring up the calendar here. So from last night, there wasn't really anything that was hugely dramatic. We did have the new home sales month on month down a little bit from 1% was the actual forecast was 3%, although the previous month was, down negative 2.6%. And then we saw the new home sales in total were 708,000 and the forecast was 700,000. So what we did see, though, were equity markets still moving higher. And we do have today core durable goods out at 8:30 in the evening, GMT plus 8 as well. 0.5 is expected. So it's just going to be interesting to see how that figure comes out. But in all honesty, it's, if the US dollar, continue to fall, then I was thinking, okay, this is a bit of a point of concern. But with everything that's coming up, I would say that, bullish, the US dollar is definitely the way to go. And I would say just written in on the charts here as well, just quickly go back to it. And, there is definitely commentary about the Delta variant being, in the back of everyone's mind in regards to the Jackson Hole Symposium coming up. But, right now, like we did yesterday with the trend analysis on the euro before a trade idea was presented, if we go to the daily, although the US dollar is a little bit harder to, pin down in regards to a trend, I would still say that, where we are, we've got resistance upcoming, but with the news as well, I would say that, long is definitely much more, with the flow of things than to be aggressive and to say there's going to be a dramatic reversal. And, if the tapering situation will, come to a conclusion sooner rather than later is what I'm seeing. So an aggressive trade would be long now, but I would wait to see it test that resistance upcoming at 93.18 later in the day before I would say, take a buy trade. So stand by for now on that. Now, what I will just do one more little thing here, an interesting article that I saw. So this just gives into perspective about the new home sales. Now, obviously, it would have been really good to see it, extend a little bit more because, the more homes that are bought, the more pressure that's present in the economy. But it's definitely, the inflation situation is definitely still hanging around, and with the employment returning steadily back to pre-COVID levels, it's just a frustration point, though. If it was really simple to say, the Fed's going to say this straight away, I would say, be conservative on the Jackson Hole Symposium. It looks like that they'll definitely fall back on that and just mention the situation. There's booster shot issues. There's, the efficacy of the vaccine is still somewhat unknown with Delta strain. So it's a bit of a confusing situation, but for now, I would say this is quite key. It has bounced the US dollar, still strong, wait to 93.18 and then go from there for a continuation of some buying. All right, guys. Now, upcoming is Jim. We do have the pound pairs in focus, but please remember, just to pay attention, just to start off with, we do have some educational points to present before we get into the nitty-gritty of the trading opportunities that are present on the pound pairs. So, Jen, a very good morning, and take it away.
Good morning, Scott, and good morning, afternoon, evening to everyone else on the session. I know we do have people from all around the world joining us. So good to be sharing with you about, more about trading and what we do here. Just to share with you now, as Scott has already gone through, to start, we do have, I'll take that away. We do have the forextradingasia.com economic calendar here. One thing I want to talk to you about is we are looking at the pound news today. We had quite a number of news on Monday where we saw the pound, the UK manufacturing PMI go from 60.4 to 60.1, services PMI for the UK going from 59.6 to a 55.5. So PMI numbers being over 50 still indicates that expansionary mode or expansionary phase. So it's still a relative positive number for the UK, despite it dropping a little bit. It's still in the expansionary phase. So nothing, this is also one reason why we saw the UK or the pound jump up further a little bit more than we expected over the past couple of days. But what you want to notice here is that we see a lot of news since Monday, Tuesday. We've had a lot of Kiwi news, retail sales numbers. Today being Wednesday, we have some Aussie, some Euro numbers, the US data to be released. But the main attention I think you should focus on is for tomorrow's GDP number to be released for the US was 6.5%, expected a 6.7. So generally what the market is expecting is a positive number towards that 6.7. I think it might even get to a 6.9%, So I think that we might see quite a good number or quite a good GDP number for the US. Why focus on the GDP number? There's so many other news to pay attention to. What I want to share with you here is something that I formulated to simplify things down for most retail traders is that very often you get a lot of news. You get a whole bunch of news, core durable goods, retail sales, different bankers speaking, different data being released, what to pay attention to. What I've actually done is I've actually narrowed it down to 7 news items that you should be paying attention to, or rather that I pay attention to. These are the 7, and you can see that the GDP, the gross domestic product, actually ranks quite high on my list because that comes towards what the governments pay attention to. Governments pay attention to. Then central banks, I'll tell you more about that in future videos, but the governments pay attention to what GDP is presenting because the GDP actually measures the total value of goods and services being produced in the country. What this actually indicates is that the overall country, whether it's going to be quite good or quite bad. So we're looking at a number going from 6.5 going to 6.7, possibly even a 6.9, which actually indicates that quarter on quarter, the US economy is actually growing slightly. It's growing, which actually could mean that we're going to see in future more employment, which actually explains why we're seeing better employment data in the US. And if we see better employment in a growing economy, we're possibly also going to see higher wage increases for those being employed. Putting all that together, what it actually indicates is some positivity, some good news towards the US dollar, right? So if we see all that good news, that positivity towards the US dollar, again, what this could mean is that we're not going to see too much happening today on the US dollar because there's no big news driving it. It's reacting at some support levels or resistance levels. But on Thursday, I do believe that we're going to see some US dollar strength being applied. And I like how my thought actually aligns with what Scott was just sharing. The dollar index now sitting in a slight consolidation, possibly testing higher over the next couple of days. So we're going to see a bit of a stronger dollar pushing up. One, possibly because of the GDP number. 2, Jackson Hole Symposium. And then on Friday, we have some more US news, the Jackson Hole Symposium and Fed Powell speaking. So quite a lot of news coming out on Friday as well. So you can see here, GDP number ranked number 3 on my list of economic data to pay attention to. So what this actually means in terms of looking at the charts, here we have the pound dollar on the H4 time frame. Pound dollar H4 time frame. I've updated my support and resistance lines already. Zooming in just so it's a bit easier to see. I really like how the pound dollar has reacted towards this 1.3747 resistance level. It's gone up, it's resisted, it's failed to break higher, with the GDP numbers to be released tomorrow, with some possible good news coming from the Jackson Hole Symposium, with the dollar index possibly tracking higher and no further news coming from the UK. I think we could see this test lower. We could see it reject this 1.3747 resistance and look for it to test lower. What I'll be looking for is selling opportunities below 1.3700. You could have a 50 pip stop loss for a good 100 pip take profit level. You're looking at a 1:2 risk reward ratio back down towards this 1.3588 support. So we're looking at it to reject this level, reject this resistance level back down towards 1.3588. And if that does happen, if we do see the pound dollar track lower towards 1.3588, what this could mean on the euro pound, as the pound dollar drops, we're going to see the euro pound being pushed up. We're going to see it being pushed up because of that inverse relationship with the pound dollar. If that goes up, we're possibly going to see that formation testing 8580 again. And I like that because I think that we're going to see a double top formation being formed at that resistance before it hits, rejects, and tracks lower. If it rejects that point, I do think it's going to track lower because of it likely to be dragged down by the euro dollar as well. So as the euro dollar drops, which we spoke about yesterday, and the pound dollar drop, I think we're going to see that reaction, a quick upward move to test and reject 8580 to track lower towards 8538. So you could be looking at a double top pattern being formed on the euro pound for the H4 time frame. So what I've just shared with you here, several different ideas, one on the pound dollar for it to track lower over the next couple of days because of US dollar strength. And in relation to that, we could see the euro pound form with a double top, testing that resistance before tracking lower. So quite a few trading opportunities later into the week. What I hope you do is not only trade carefully, not only manage your risk and risk management and trade sizing. Make sure you keep up to date with the news, check out the videos, and then ask questions. Those of you on Traders Club, ask questions, and we're always there to help you. Back to you, Scott.
All right, thanks very much, Jen. And again, guys, if you're wondering, you didn't catch all of that, please note that we do share all this as well on the YouTube channel, which has been recently revamped as well. So I'll send the links in the chat as well, but I strongly suggest you check it out. There's some great resources there that are available for you to refer to. And even this educational portion in the currency call is actually shared separately. So you've got it right there for you to digest as well. Now, next up, we've got Kim Hong as well. So Kim Hong specializes in trade setups that can be taken and they don't have to be actively managed as much as some of the other trade ideas that we do put out in the LCMS Traders Club. So Kim Hong, we look forward to hearing your thoughts on the next trade idea.
All right, thank you, Scott. Okay, let's dive straight into the trade idea. Okay, so what you are looking at right here is a trade idea that I fired out last Thursday. Okay, August 19, dollar CAD. Okay, FOMC members hawkish on QE tapering. Now, actually, I think it was like a few hours before I fired out this trade idea that the FOMC, okay, the US FOMC released their monetary policy meeting minutes, okay, for the most recent meeting, okay. So in the minutes, I'm not going to go through it, it's too long. So, long story short, most of the members, okay, most of the committee members actually felt that a QE tapering is very likely this year, okay, because they felt that substantial further progress, okay, has been the substantial further progress criterion has been met, okay, in terms of the price stability goal, okay, meaning inflation, okay, price stability goal, inflation. So we have seen that recent inflation in the US has been rising very, very high, okay, has been spiking very, very high. So from the price stability goal point of view, it has been met. Now, from the employment point of view, maximum employment point of view, it's still, yes, although it's still a distance from the pre-pandemic level, I think it's some like 6 million jobs away from the pre-pandemic level. Nonetheless, quite a big progress has been made, okay, in terms of the number of jobs being added, okay, as I've been covering for the past few months, jobs have been increasing quite strongly, I would say, okay. Like last month, I think there was close to 1 million jobs being added, and then the prior month, there was an upwards revision to 900,000 of jobs being added as well, okay. So with these two, this dual mandate of the Fed being, making very, very good progress, strong progress, many of the committee members actually, during the meeting, they actually expressed their opinions that, it's likely that there's going to be a QE tapering from the US Federal Reserve this year. Okay, so with that, I was actually seeing I was actually expecting a bullish US dollar, right? So what I did was this yellow dotted line over here, okay, was actually the day that the trade idea was fired out, as well as the day that the Federal Reserve released its minutes. Okay, so it wasn't like, you know, it actually triggered my entry level of 1.275, okay, that day. And the following day, the next day, it actually hit my TP. It was quite fast, to be honest. I mean, it's FOMC, right? What do you guys expect? I mean, to be honest, I mean, we have been hearing a lot from the Federal Reserve members, you know, in their individual interviews with news agencies on, you know, on their thoughts and ideas on QE tapering, when the QE tapering will be happening, right? And from time to time, we hear members saying that they are expecting, they're hoping, they're seeing a QE tapering this year, right? And then some of them, they actually say that, you know, it may be early next year and so on and so forth. But nonetheless, be it this year or early next year, we are already expecting, okay, the market is already expecting the QE tapering soon. So with that, you know, the trade idea actually triggered and it hits TP before coming back down. Now, yeah, okay, the coming down part is actually due to, you know, oil prices. As you guys probably know, like recently there was a rise in oil prices, which actually directly, I would say, lead to the strengthening of the Canadian dollar, okay, which actually brought the dollar CAD down. Now, fortunately, it hit TP before coming back down, okay? So my stop loss was actually set behind the 1.27 handle. Why is that the case? Because it's actually a level that was last traded, well, the last time it was traded above was actually early this year, like, you know, briefly above, I would say. Like this region that you see over here is actually end of January, okay? And then anything before, yeah. So, you know, ever since it came down to below the 1.27 handle, it has been like hovering.
Sorry, Kim Hong, just to let you know, we're seeing the Forex Trading Asia site rather than your chart.
Okay. Oh, okay. Thanks for reminding me. Let me just switch over to my chart. Okay, so sorry about that. Now, so where was I? Okay, as you can see, the dotted line over here is actually my entry point. The point that I actually sent out my trade idea, okay? And it's also the same day that the Fed actually released their minutes, okay? So with the bullishness coming out from the Fed, you know, the very same day, the trade idea actually got triggered at the 1.275 level, all right? A stop loss was actually placed 150, 160 pips below, okay? And a TP of 160 pips was set above. Now, I think it was very, very bullish. Like the market was very bullish based on the FOMC minutes, okay? And it actually hit my TP level the very next day, okay? And then after that, it came back down. This was actually due to, you know, the weakening of, sorry, not the weakening of US dollar, but the strengthening of the Canadian dollar due to the rise in oil prices, okay? So, yeah, I think this is pretty much it. But yeah, a point to make is, I think I actually made it point yesterday, you know, it's actually about stop losses and things like that. So it's very important to actually keep your stop loss, you know, behind a level, an area that you think is very hard to be broken, right? In this case, I keep it behind in this case, below, okay, 1.27 handle, okay? Because as you can see here, like I mentioned just now, the last time it was trading above this 1.27 handle was early this year, right? Briefly around February, okay? This region over here, January, late January, early February. And then prior to that, it will be like 2020. So personally, I feel like this 1.27 level is a very strong level, which is why I set my stop loss behind, okay? Yeah, okay, so with that, I've come to the end of my sharing. I will hand it back to Scott.
All right, thank you very much, Kim Hong, for sharing your thoughts on that trade idea. And so guys, if you're watching this and you're a little bit curious into, you know, getting some more information on the setups that are high probability and how everything comes together to, become a better trader. And also, how to get involved, with us instead of just this 30-minute call Monday to Friday. Daniel is going to go into some details about the LCMS Traders Club and also the upcoming live trading call, which is a real feature of the week. Tonight it's coming up, and Daniel's just going to go over a preview of what to expect from that call tonight. Thanks, Daniel.
Hey, thank you, Scott. Great to be communicating about LCMS Traders Club. But however, let me say that tonight is going to be good because we're going to have a live trading sessions together with a lot of club members. This live trading session started off because a lot of people were complaining. A lot of members were saying that they don't know time to trade. When they come home they're tired. So they only have so little time in the evenings, so they can't take a trade anymore, and they have no time to prepare, and that's not true. So every Wednesday evening at 9 p.m, we have a live trading sessions with all the club members. We show all the LCMS Traders Club members of how preparations can be done. On the computer, when you sit down, how you can prepare to be done within 15 to 20 minutes, and then know how you are doing, what you are doing with the based on analysis, on the 5 steps analysis. And we don't need to be so that you don't need to be computer the whole day, but you can select the time, like some work like evenings, GMT plus 8 after work at 8 o'clock. So you can prepare on 9 o'clock for one hour, and then you can start trading for the next few hours. You don't really need to be a computer. You can perform profitable trades even just then. Okay, so today it's Wednesday, so there are live trading sessions. So what will be happening? Today? Excuse me. So what happening today will be that we'll be going through straight away what has happened this week, right? On Wednesdays, Monday, Tuesdays, and what's going to happen Thursday, Friday, and we're going to look at the trading plans. And we have on a Monday we have group coaching sessions. There we have a lot of trade ideas. There we're going to see what happened. Was there anything activated, or was there still active or not? Like for example, the EU, we're talking about the downtrend coming in. Give you some examples. We think that it will be rejection around this area below 1.17. We'll see what's going to happen and whether US dollar going to strengthen. The other one, for example, on Monday we discussed was the pound yen, right? We expect it to be going up, hitting the resistance of 151.37 before coming back down, where all the safe haven currency strength could come in. So, for example, of the US dollar, the yen pairs as well. So, coming in, we will review, and not only that, we will also, because with all the preparations done, we know the fundamental directions coming in. What we will be doing is also live trading. That means we'll go down for a 1 hour time frame or 15-minute time frame to see within that 1 hour the US market open at GMT plus 8 9 p.m. whether or not there's any trading opportunities that we can take together and literally make profits together, right? So it's going to be very important. So for those who are already the club members, do remember we have a lot of people joining us. So do come and join us and benefit from these sessions, sharing sessions together. And if anybody got any questions from there, also can ask live right there. And those who are not already in the club members, why don't you just join us? And this club membership is going to be worth thousands here. So let me give you a share here. This LCMS Traders Club platform, we have not only have the group coaching sessions, live trading sessions. You can see this platform is a dedicated platform where all the trading floors, where we can do a lot of discussions, market watch, signal analysis, and many more. Now, how do you go about joining these sessions here? This is worth $1,000. All you got to do is go to tradersclub.lcms.com.sg. Scroll it all the way down here, and this is only, you can see it's only $49 a month, right? For $49 a month, it's without a doubt the least you must do to make sure you are achieving your best in trading. Now, this price can change anytime, so do get aboard now. Click it in, fill it in, and I'll see you in the club. Scott.
Thank you, Daniel. And guys, I have shared some links for the Traders Club as well as the 5-step checklist as well, just to learn exactly how we put together a trade idea and how we actually go about trading markets as well. And also I provided the link for Forex Briefcase, which is the managed account service that we do offer for individuals that see the benefits of Forex trading, but don't have the time or even really the desire to, learn how to trade and, be in front of the chart. So we do offer that service as well. And we're actually very close to 100% for the 3 years that we have been around for. That's the background is the 0.88% was gained in August, 16.04% has been gained this year so far, and 98.22% in 36 months, and very small drawdowns as well. So it's a nice steady returner. So guys, that is the end of the currency call for Wednesday. Remember, tomorrow we do have the yen pairs and we also have gold as well. Thank you for watching and bye for now. Have a great day.